AJ, I'll come to you first. And this little late day sell-off that we saw, nothing too pronounced, but your take on today's action, the sort of sector breakdown and that little sell-off into the close.
Yeah, thanks for having me, Wolf. I think today was mostly due to some of the movements we saw in rates. Clearly, value and the reopen trade coming back around again. And honestly, what we saw today is kind of reminiscent of what we saw last year around this time. Growth obviously performed well in Q2 last year, just like it did this year. And then, September being a little bit more volatile than normal. But we're starting to see that move up in rates. So we see, obviously, financials and energy perform well. And so we're seeing the market start to move and back into that reopen trade again. And I wouldn't be surprised, honestly, if the Russell 2000 outperformed other indices like it did last year from this point going forward.
Yeah, Charlie, I want to go back to this Fed-related news. I mean, we don't know yet who would be replacing Kaplan or Rosengren, and I realize it might not have immediate impact in terms of the policy that's being set or changing right now from the Fed, but depending on those replacements and how that could, I guess, speak to the composition of federal officials in general in years to the future, is there a market impact here potentially that we should be watching for?
Oh, that's a good question, Morgan. I think that the Fed officials have been dovish and that's had a significant impact. I think inflation is going to override that. I think the persistence of inflation, the bond market at some point is going to say, we don't care how dovish you are. We are not going to lend you money at 1.4% if we got 3% inflation. So at some point here, the dovish, I think tapering is going to happen. I think they're going to stop buying the incredible amount of bonds they've been buying. They can't do that in the face of a very strong economy and high inflation. And so at some point, it's just not going to matter how dovish these Fed officers are.
Yeah, Lindsay, I mean, just looking to 2022, given the fact that we do only have a couple more months left to this year, I mean, you have the potential, based on some of the stuff we're seeing in D.C. this week, you have the potential for higher taxes. We already know that there's more regulations starting to roll out for more industries right now as well. You have a Fed that's beginning to take some of the stimulus away. Is there, and then of course this idea that Q2 is potentially peak economic growth, peak earnings, so you're going to have tougher comps for companies reporting earnings into 2022 as well. I mean, are the risks mounting here for the markets more broadly, or do you see equities continuing to chug higher?
Yeah, look, I think the wall of worry continues to grow. That's our jobs as investors, to really kind of be concerned about where the issues and risks do lie, right? But I do think that while some of those are very valid worries and concerns by market participants, I do think that the one thing that you didn't mention was the strength of the consumer. While inflation could be coming, one thing that we have seen is that the consumer has been resilient throughout this. And while economic and earnings growth may be peaking in the second quarter, it's still expected to remain above trend for the next couple quarters and into 2022. So that is a positive sign. I do think, sure, peak earnings. With peak earnings comes peak margins. Right now, the consensus for earnings, EBIT margins going out into the next couple quarters is to reach 20 or to reach 17% in 2022. It's currently margins are at a peak now. If there is risk to that, that's what I think the biggest risk in the market is to where margins can go from here. The historical margin rate for the S&P 500 is about 14%. So even if we come in a little bit, I think the market can withstand that as long as the consumer remains strong and is able to continue to spend. I think that we could be in a place to really maintain that above trend growth at least through 2022.